Welcome, everybody, to the Chinchilla Pickin' Podcast. It is September the 12th, 2023 at 6:29 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only Baron of Bonds, Brandon Beaver. Brandon, what is up, man?
Oh, man, after Sunday night, I am great.
Yes, if you're a listener of our podcast, you should know that Brandon is a Cowboys fan. And so he is ecstatic right now because of the one game they won.
40-0. Largest blowout in opening day history since 1999. All right. Word of the day. Okay, we'll do letter of the day. The letter of the day is L. The big fat L they gave the Giants.
Nice. I'm very happy for you, man. Very happy for you and the Cowboy fans out there. You guys have something to celebrate. Appreciate that.
The defense is a beast. We don't even need our offense to be on the field.
I think you do.
No, I don't
that's
think
how you score points.
Oh, they don't. Well, no, the defense and the special teams scored most of the points Sunday night.
So your offense is just that bad. Got it.
No, it's decent, but it doesn't have to be good. This Micah Parsons and company, Trayvon Diggs. Oh man.
Look, all right. Good for you, man. Good for you. I tell you what, though, here's what I'm excited about. Gaming nudes, right?
Gaming nudes?
Gaming news. Sorry. Bethesda released that game Starfield, I believe it was. Everybody's been posting about it, talking about it. I'm happy there's actually a new game and not just a ABC game the 4th. I'm happy we have a new game out. All right.
Good for all the Xbox players.
Right, exactly. So new game out there, Starfield. And I'm happy everyone can start playing that and have fun with that. I'm also excited about there's a VR game that you couldn't play on the Quest before, right? The Quest, because the Quest is a very basic VR system. But if you had a PC-based system, you were able to play this VR game called Asgard's Wrath. It was very, very cool. Like, it was very interactive, a very fun game to play, and it was all about the gods of the Vikings and everything and all this stuff. Well, now they have Asgard's Wrath 2, and it's available on the new Quest that's coming out, the Oculus Quest 3, which I'm thinking that if anybody that played the first version using a PC will be excited about this one because it should be just as good, but you have to have the updated Quest to play it. So should be fun. Good times for gamings right now.
Yeah, unless you own a PlayStation 5 like I do. Where's the Justice Department at, Dave, with the Bethesda Microsoft merger?
You know what?
Tear those companies apart.
No. And now Activision Blizzard's with Microsoft, so we're all good.
Well, they had to make a deal. They had to say, well, that you're going to release Call of Duty on PlayStation. I don't know if it holds any water, but
I mean, if it doesn't, it's a good deal for Microsoft. Yeah. You're gonna have to buy an Xbox and a PlayStation and play both.
Yep.
More money for everybody, right? Anyways, let's get into some stock and investment news. What do you say? Rules. The rules are Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live discussion, live back and forth right here on the show for you. Brandon is bringing the beef of the show. So, Brandon, please, the Baron of Bonds, go first.
All right. So, over the past week, mortgage rates topped 7%, hitting a 21-year high. Now, the National Association of Home Builders CEO Jim Tobin told Yahoo Finance that I think what we're seeing is the Fed's efforts to crush inflation are in turn starting to crush demand. I don't think it's starting. I think it's already been happening for a while now. 7% mortgage rates are really keeping people on the sidelines and keeping people in their existing homes. So prices are staying the same because nobody's selling. But the problem is that also nobody's buying either because interest rates are way too high. Prices are staying high not because a surge of demand, but because a lack of supply. It's very bad if you're involved in the housing market or a retailer or the kind of products that people purchase when they move to a new home, appliances and furnitures and things like that. Just not doing so well. Ian, give me 1 second, Dave. Ian Shepherdson, chief economist of Pantheon Macroeconomics, says all these things are triggered by transaction volumes, and I'm pretty confident that they're all going to take a pounding. Go ahead, Dave.
All right, so you made a comment there that there's a lack of supply, and I completely disagree with that.
With
I just
housing?
read an article. I
Nobody's
just read an
doing it.
article. Yeah, dude, I just read again. Let me get to my evidence here. I just read an article today that last month showed the largest double-digit increase in new home listings in over a year and a half.
Will it go from 10 to 20?
I'm just saying it was a large increase in new home listings. So there is supply. I think it has more to do with the higher mortgage rate, since the majority of all buyers have to take out a loan. They would rather wait for a 2 to 3% mortgage rate than pay that 7 to 8% mortgage rate that they're going to get right now. They're
Well, the
going to save
prices
a
need
lot
to
more
come down.
money. Huh?
Prices need to come down then.
Prices have been coming down. So I've been looking on Zillow the past few months, mainly because I'm looking to buy for myself. I'm just looking around, and I've noticed that if you go on a lot of houses around here in the Cincinnati, Ohio area, you will see that they have dropped the price of those houses numerous times over the past year because they still haven't sold. And so there's a lot of houses out there that have been taken off the market and then placed back on, taken off, then placed back on. And it's there is supply. It's just some people are taking their houses off right now because they can't get the price they want.
So historically speaking, though, I wonder, and this is what I'm Googling right now.
Oh, you're Googling some numbers here. Okay. So
Housing prices.
because I don't know where you were headed with this. I have no idea where you were headed with this, but there is a huge whale out there now, and I wasn't even going to cover this, but there's a huge whale that went out there it was today, and he shorted via option puts a number of retail companies and retail sector ETFs, and he was shorting them.
Okay.
I don't know who this person is, but they were putting in 6 figures each on all these options, shorting the real estate market as a whole.
Okay. So no matter what the situation is there, because I haven't found any numbers to disprove you, Dave. In June of 2023, the number of homes sold in Ohio fell by 13.5%. This is just for the state of Ohio. So
yeah, the number of houses sold has gone down, yes, but the supply is available if the market is there to buy them up.
If they want to buy it up. So we're going to see
people don't. People don't because they don't want to pay the mortgage rate. I wasn't even going to talk about housing and mortgages, but like I didn't even know you were going to bring this up. But I have been doing some research on this the past just today, because this is on my days off. What do? I watch CNBC and I research the real estate market for some reason. This is my life. Welcome to it. But there's been a huge movement in real estate options. In the real estate sector and ETFs and companies as well. Huge puts. So you can find on Fidelity. Go to Fidelity and then the research and then real estate options in the search bar, and you'll I'm sure it'll pull it up for you. Some guys out there, just the whole market, the sector.
The people that are selling right now, where are they going to live? Rent prices are crazy right now. Like, what's the plan? If you're selling a house right now in this market, you're probably selling a house that you bought on a 3% interest rate. Housing prices, as you said, you say they're coming down. They're not nearly, to a reasonable rate right now as far as prices go to justify a 7% interest rate.
No, they're not coming down enough to justify a 7% interest rate. No, they're dropping it what they feel like is just enough to sell the house. And you get all kinds of reasons why you have to sell a house. New job, you have to move, different things in your family life. You marry someone that you guys want to put together. You know what I mean? There's all
Yeah.
kinds of reasons why
Look,
you would sell in a bad market, and it's because usually you have to.
right, right, okay, and they're gonna have to keep dropping it because they're not gonna find any buyers unless they do. But
Right.
um, so disconnect between demand and pricing for home goods, basically, and homes for sure. The demand's just not there, but the prices are still a little elevated. Prices for household furnishings and supplies, which include furniture, bedding, curtains, carpets, rose 1.1% in August from July, the fastest monthly pace since January, where they were 10.6% higher than a year before. Here's the thing about this, though. This isn't a price increase because of demand either. It's a price increase because in sticky inflation. It really is. Um,
Well, we'll see. We'll see tomorrow on the CPI number. What do you mean? Do you believe the CPI tomorrow number is going to come up above 4%?
well, no, I'm going a little bit deeper here than the CPI though, because we're looking at specifics when it comes to bedding, curtains, and furniture, and carpets, rising 1.1% in August. So we don't really know the September numbers yet because we're still in September. We'll know those in October as far as this goes. But the CPI, I think, is going to be a little bit sticky. I really do. But when it comes to these home furnishing goods, they're still going up in prices. And that brings us to RH's earnings. So what happens when people aren't buying new homes? They're not furnishing their new homes, right? And if the cost of these home goods and the cost of furnishings and stuff like that is still continuing to go up despite demand dropping, that's not good for RH either. So in its shareholder letter, the company stated, we continue to expect the luxury housing market and the broader economy to remain challenging throughout fiscal 2023 and into next year as mortgage rates continue to trend at 20-year highs, and the current outlook for rates is to remain unchanged until the second quarter of 2024. They reported quarterly earnings of $3.93 per share. That did beat the analyst consensus estimate of $2.56 a share, but this was a 51.36% decrease over earnings, which were $8.08 per share last year. Go ahead, Dave.
So you made the case, I believe it was about a year ago, for RH, and I disagreed with you then, but you made a good case, and you said that the luxury brands, and I said, yeah, luxury brands typically hold up even during recessions and depressions.
Yeah.
They typically hold up, but RH was actually pulling from the middle class as well, who was, they would save up and buy one of the sofas, right? The higher end households would buy the whole living room set, but the middle class would come and buy a sofa or come and buy a chair or maybe one thing for their kitchen. And so that was supplementing that. So when you lose the middle class buying power, now you're strictly only pulling from the higher end households, and there's not enough of them to continue the growth of stores.
Right.
Is what I'm thinking, and that's what's leading towards RH having to consolidate, is what I believe they're going to have to do.
I think so too. I still like them long term, but here's the thing. I sold this company 3 or 4 days before earnings, I think. Mostly because I wanted to raise more cash to buy more Disney stock and more Pfizer. But I also wanted to raise some cash on the side as well. And so I took a 12% gain on this, and I'm lucky I did, because I would have been, it would have been deep in the red at this point in time. But I still like RH for the long term. It just happened to be the odd man out. When I was making the case for Restoration Hardware, it was somewhere around, like, I think 260, 270 a share at the very beginning. And the price had increased too much. It was trading at 30 times earnings. I didn't think that made any sense, especially, if I've got the feeling that we're going into a recession and looking at the housing market and such, it just didn't make any sense to be at 30 times earnings, and it wound up being my odd man out. So.
Gotcha.
All right. So they reported quarterly sales of $800.48 million, which beat the analyst consensus estimate of $784.9 million. but this was also a 19.2% decrease in sales over the same period of last year. They did say this month they expected sales to keep falling through at least January because of housing market weakness over the next several quarters and the Fed's anticipated rate increases, which I don't think we have that many left to go, but they're still in the cards. They expect their net revenue to drop between 15% and 18% next quarter, which ends October 29th. They expect net revenue decline of 3.5% to 5.5% for its 2022 fiscal year, which ends in January. And compared with a 32% increase last year. So just it was a tough earnings call. It really was. There's no way to sugarcoat it. And they just recently opened up in England. I was expecting to see some positives from that. I didn't see many positives in this earnings call whatsoever.
Did you say they just opened up in Britain?
Yeah, I think it was England. Yeah.
That's a very competitive market. That's a very saturated market. I know of a number of companies in there, which I can't talk about a lot of them here on the show just because of my conflict of interest. But I will say I will say this, and I can say this, that's a very saturated market, and that's hard to break into.
Yeah, but they're trying to expand their footprint in all of Europe, really. Rough time to do it in, but once again, if you're looking long term, there should be some decent market share gains there. But right now, just a tough time. Gary Friedman, the CEO of RH, said people keep saying, and you're going to love this one, Dave. People keep saying, "Are we going to be in a recession?" He says, "We're in a recession. Anybody who thinks we're not in a recession is crazy." He says the housing market is in a recession.
Call me crazy.
Getting started. He says it's just getting started, so it's probably going to be a difficult 12 to 18 months. He's got a specific point of view, though. He with his job, he's not really looking at the macroeconomics here. He's looking specifically at his furniture industry. And if you look at the furniture industry and in the housing market, yeah, those particular sectors are probably in a recession. That's not what he said. He's saying the entire economy, but I think his point of view is a little bit skewed there. Even though I do think we are going into a recession, I don't think we're in it yet. I don't think the numbers show that. All right, let's touch a little bit on Oracle's earnings.
Oh, Oracle. Oh man. They actually dropped for good reason this time. Yeah. After an earnings call. 99% of the time they have great news and it drops. This time it actually dropped for a good reason going to it.
They always do that run up right into earnings and then it comes right back down to even.
Right? Yes. Please get into this. Go ahead. All right.
Revenue rose 9% to $12.45 billion, in line with analyst estimates. Cloud revenue continued to drive growth, rising 30% year over year, but that figure represented a slower rate than in May and a year ago quarters. On the conference call with analysts, Katz forecast second quarter earnings of $1.30 to $1.34 a share on revenue growth of 5% to 7%, or $12.89 billion to $13.13 billion. Now, analysts surveyed by FactSet had estimated earnings of $1.34 per share and revenue of $13.28 billion. So they're really looking higher on that revenue and towards the higher end of the guidance on the earnings per share there. This is the case where I think Oracle kind of got caught up in that AI bubble, and it was pushed to a price to earnings ratio of 40, if I remember correct, right before the earnings. And it was just overpriced. I think it was just overpriced, and we got too excited about this. We need to pull back a little bit. Go ahead, Dave. What are your thoughts on Oracle?
My thoughts on Oracle is I just stay away. The guidance is always contrary to where they should be heading. where they should be heading is always contrary to, where the analysts think they're heading. I never am able to get it right. And so I just kind of stay away. Oracle should be in a position to really get part of this AI boom somehow, but I don't, they're just failing to do so. They are in software and IT and phone systems. I mean, there's so many different places for them to jump in here, and they're just not. So,
Yep, I agree. And then to the news article that probably everybody who listens to this podcast on a weekly basis knows I was going to get to.
Thank you guys for listening, by the way. Here we go again, Brandon. Go ahead.
Disney and Charter Communications, they reached
Bob Iger and Disney. Here we go. I'm teasing. I'm sorry. Go ahead.
So they reached an agreement. They restored their popular channels, including ESPN and ABC, just right in the nick of time before Monday Night Football. I'm sure there's no coincidence there. 15 million subscribers had been blacked out of Disney channels for more than a week. So just before the New York Jets hit the field to win against the Buffalo Bills and yet another upset for the week, the deal was made. ESPN came back on air to the Spectrum and Charter Communications customers and ending, that blackout.
Our handful of Swiss listeners that listen to us from Switzerland are like, who's this Aaron Rodgers and Jets people that you're talking about right now? Thank you for listening. It's American football players and American footballers.
It is. All right. As a part of the deal, the ad-supported version of Disney Plus will now be included in Spectrum TV Select video packages. I think, honestly...
Yeah, hold on. I want to put a little asterisk on here. According to the deal, Spectrum customers get Disney Plus at a wholesale cost. So they get it at a cheaper rate than everybody else would get it if you did not have Spectrum to begin with.
Yes, but you're increasing the turn of this. The other side of this is you're increasing the value of the ad space on the ad-supported version because you're going to have more people watching.
Maybe. Yes, here's what I've been hearing, and this has been on radio and TV, and I don't know if it's just the talking heads on the radio and TV or what, but people are complaining about the amount of ads when they switch to these ad versions on the streaming services, and they're saying, look, I'd rather just pay a couple extra bucks a month and just not have ads because this is getting to be annoying. We were so used to streaming without ads for so long that we don't want to be bothered with ads right now.
Yeah, it's getting annoying. We kind of came full circle back in the streaming space, didn't we? We all switched to streaming because we didn't want the ads and we didn't want the cable prices that we were paying. Now we've got 10 to 20 different streaming services we're all paying for, which is probably more than what we were paying our cable company before. And we're all watching ads.
Yep, it's awful.
It sucks. All right. The ad-supported ESPN Plus will be available to Charter customers. They'll have to subscribe to a tier that includes other sports channels, such as regional sports networks and such. I didn't see an exact value of this deal when I was researching this yesterday or when I did a quick Google search of it today, to be honest with you. I know Disney was looking for $2.2 billion in it. I wouldn't be surprised if they got it. Charter was saying $2.2 billion was too much at the time, but Charter was also saying, okay, we'll do the $2.2 billion, but you have to give us access to Disney Plus ad-supported version to all of our customers, and you also have to do the wholesale price on Disney Plus. And Disney was balking at that. That was really the biggest hiccup in this deal, that as far as I understood. The ad-supported version of Disney Plus going to Spectrum, I think that does benefit Disney, but the wholesale price, that was kind of the bump in the road on this. So I wouldn't be surprised if they got the 2.2. Go ahead, Dave.
All right, man. Disney's a winner on this, and Spectrum is a winner on this. Both are. It's a win-win, I believe. Not everybody got everything they wanted, but everybody got something. Spectrum got the wholesale price and the ad, within the version with ads for free, and then Disney got the billions of dollars they needed to complete their Hulu deal that they're gonna. That Bob Iger has said he's going to complete by the end of this year. Is his goal. Is to complete that Hulu deal.
I agree.
The complete buyout of Hulu. So I think that when Disney buys out Hulu, now they have all these it's just going to be huge for Disney, because and then want people to go to Hulu Live, and then after that Disney won't need Spectrum anymore.
Yeah.
So this might be the last contract you see with Spectrum and other cable or streaming or subscribers. Maybe YouTube, they strike a deal with YouTube Live or something, but Disney will be asking for more money because they have Hulu Live and you could just go there.
Yeah. What a tumultuous, like 6 or 7 months or whatever it's been since Iger's taken back over, and it's not really his fault. The Charter deal, that kind of, that was, it didn't come out of nowhere, but there was negotiations that were involved in it. But the Charter deal happening, the strike for the writers, and we're not, it's not, go ahead, Dave. I'm going to get into a whole thing, so I'm going to let you go first.
All right. Well, I mean, I'm all right. This is just a personal opinion here, but you are not by any short means the only person that's saying poor Bob Iger. I've heard that from every talking head the past week and a half, 2 weeks. Poor Bob Iger. He's having to deal with this at Disney. He's having to deal with that. I'm like, the guy was brought in. We knew the situation. He's a seasoned CEO. He's getting paid enough money. This is his job. I don't say poor Bob Iger. I say, do your job, Bob. You're doing well. Let's see if you can make these things happen that you promised. We'll wait and see the results. We all know you have these headwinds. I don't need to sit here and say, here's a violin and a tissue for you, Bob. I'm sorry. You were brought in. You knew the job when you got brought in. You knew the things that were coming up when you got brought in. So far he seems to be doing all right. Again, he walked into a lot of headwinds. I will admit that. He took a job that he walked in. There's a lot of issues and troubles, but I'm not going to sit here and say poor Bob.
I will give him $100 bill to wipe his tears and blow his nose with. It'll come out of his pocket, though. Out of his, because I don't have one right now. So I'll take it out of his pocket and give it to him. But
there you go. You and all the other talking heads. Poor Bob.
So here's the thing. It's not clear skies here yet. We've still got the writer's strike. We've still got a huge transition into streaming here. We've still got the situation with ESPN, what it's going to be valued at, if they're going to find a partner to take this, ESPN to the next level and a direct consumer product. Here's what I'm looking at. I want this writer's strike to end. I want ESPN's direct to consumer product to be fairly valued, hopefully overvalued for us shareholders, and to go to the market without any hiccups. And then I want also that Hulu deal to come to fruition. Those are the three things I'm looking at. The skies will be much clearer for Disney once they happen. Right now, there's a lot of headwinds for the stock. So I'm buying it. I'm buying quite a bit of it. I'm stocking up on it. I'm not expecting any immediate, crazy, amazing gains for the next couple of months. But over the long term, I think it's going to pay off pretty well.
I think long term, because of everything Disney's buying, and with Iger at the helm right now, that you will see a higher stock price than where it's at now in a 6-month time frame. But you're not going to see it before then, because too many, like you said, too many things have to be completed that he's been trying to implement before you see that.
Yeah, and look at GE. GE turned around fairly quickly. A lot quicker than I expected it to. So maybe it comes faster than I'm expecting.
There you go.
That's all for me.
That's it, really? I thought you had more, man.
Yeah, that's it. Yeah.
All right. Fair enough. All right. Well, I ain't got nothing. So no, I'm just kidding here. I got a few things here. I want to actually, can we hit you with some headlines, man? Let's do headlines first before I get into, we're going to talk about ARM Holdings here in a minute. So I'll throw that in your head there, but let's do some headlines. You ready? All right, man. First headline. Tesla tops list of most shorted stocks for third month in August.
No surprise.
Well, I don't know why people keep shorting Tesla. I think it's just because they hate Tesla, and I don't think it has anything to do really with the company, because the company is on the right path.
Yeah.
Morgan Stanley just did a price target today, what, 450, or this week of $450 a share, because of the AI and the software that Tesla is running is going to revolutionize the cars, and to make them, it's actually going to make the cars cheaper and more fuel efficient running on their battery. So they're going to be able to have a longer range because of the AI technology that they're implementing right now in the Teslas that will be rolling off next year off the assembly lines. So the Dojo supercomputer is what it's called. It's going to bolster Tesla's market value, and that's what we're looking at here. So I don't get why we're having so many shorts on it. I think it's just people just don't like Tesla to begin with. Like Bill Gates still has a short position on Tesla that he's had for a long time now, and he's got to be losing a ton of money on it. But I don't think Bill Gates cares. I think he's just going to hold that just get out of stubbornness.
Yeah, I don't think they like Elon.
Yeah. Well, yeah, right. Yeah, you're right. So let me get in number 2, number 3 of most shorted companies, and this is all from Hazeltree. They track 12,000 equities globally. Just so you know, so it's not just like a few hundred. Charter Communications came in number 2, and Apple came in at number 3 for most shorted companies last month. Which no surprise there with Charter and the news around them and everything that was going on. Apple's a little bit of a surprise, but I think you're going to see a turnaround in there in Apple. Actually, hedge funds has been shorting U.S. stocks at a rapid pace in recent weeks. This is what the article is saying. Goldman Sachs note this week showed that a total short bets reached their highest value in 6 months. So all major companies are shorting stocks right now. That's kind of interesting if you look at it.
Yeah, and I think the Disney thing gave Charter a shot in the arm. I'm not sure that it saved the company in the long term.
Exactly. There you go. That's one article down. You ready for the next one?
Yeah.
Restaurant Brands reports renewal agreements of Coca-Cola for 4 brands. So with this this came out across on the MT Newswires at 2:43 p.m. Restaurant Brands International (QSR) said Monday that its 4 restaurant brands in the U.S. that's Burger King, Popeyes, Firehouse Subs, and Tim Hortons have renewed their agreements of Coca-Cola until 2033. So if you and Coca-Cola under the agreement has to help them out with some of the advertising as well. So if you look at this, you look at Coca-Cola continues to renew agreements with companies they already had. They're probably up in the price as inflation goes up. So they're getting new agreements, higher prices. Coca-Cola remains a good, stable company to own. Thoughts, Brandon?
It does. It's just kind of at the higher end of the range of the valuation right now. Still, it's down 8% year over year. I don't know that I could justify 24 times earnings for Coke, but it's Coke. Brand equity. You can never go wrong with brand equity. It's one of the reasons why I own Disney. So
I agree. Yeah, brand equity does paint a good picture there. So all right. Last one here. Decongest. This is on CNBC. If you want to see, it's by Annika Kim Constantino. Decongestion found in many cold and allergy medicines doesn't actually work. There was a study done, and if you read in the whole article, you read that there was a study done back in 2004, 2005, where they came out and they said, hey, this decongestion medicine that you guys have in there, it doesn't actually do its job. Well, and that was presented to the FDA, and the FDA said, well, continue doing more trials. We're not going to do anything about it now. Please give us more information. So the University of Florida Gators, they went ahead and did more trials and more information. The particular drug in question is, I'm probably going to say this wrong, but it's phenylephrine. What they did, they compared it to placebo effect, and the placebo effect actually did better. So it actually doesn't do anything taken in a pill form for helping with nasal congestion. Now you're asking, okay, what is this actually in? Is it really in anything? Here's for the drugs. These aren't the only ones. These are just for the biggest names of the drugs that actually use this and are going to be affected by this. You ready? It's NyQuil, Benadryl, Sudafed, and Mucinex.
Wow.
For the biggest names out there. In fact, the drugs that are going to have to be pulled off the shelf and reformulated altogether total represent a $1.8 billion hit to the U.S. economy. And so that's going to be a big downturn towards CVS, Walgreens stock.
Procter
and
Gamble.
yeah, I mean, so there's a lot of companies here that if this moves further along and the FDA says you have to pull it, then that's going to be a huge hit. That's a 1.8 billion hit to U.S. economy. Thoughts, Brandon?
Yeah, and then the question is are they going to have to reformulate the entire, the entire drug, or are they just going to have to relabel?
I mean, what are you going to relabel with? You can't relabel and say decongestant when it doesn't do it.
It's just decongestant with a
maybe question marks.
Surgeon General's warning: this does not work.
I think that I know of Mucinex. It's guaifenesin is what the actual drug that works for Mucinex. I don't know why they had I think these are for when you mix a cold and flu package, if you will, and it's not just a one particular drug. It's when you get the whole, hey, knocks out all 8 of these symptoms, that particular one. And this is a huge hit going into the fall and into cold and flu season.
I never thought they worked. I never thought they did. I mean, they'll put me to bed, they'll make me feel a little bit better, but they don't decongest me.
So yeah, I mean, yeah. So now we have yet to see what the full fallout's going to be on this, but it's not looking good for anybody involved with it, man.
Procter & Gamble, big hit on them.
Yeah. So we'll see what happens there. Don't know what happens. Could go one way, could not go another way. All right. I had one more, but I can't find it now because I pull up all these in my tabs here. So we'll move on to the big story that we wanted to cover here and talk a little bit more about, because there's a number of different ways you can go with this story and you could go with this news. And we've talked about it. Like I think this is the 3rd show in a row I brought this up. And the company we're talking about is ARM Holdings. You've heard about it in news if you follow, if you're an investor. And I brought it up here. I said that, and I asked the question when we first brought it up, did SoftBank overpay for this? Because SoftBank bought this at a valuation of what it should be. What does it say here? Yeah, valuation of $64 billion was the valuation that SoftBank paid price of for ARM Holdings, assuming it was going to hit that valuation. And we asked the question 3 weeks ago, is it actually going to hit that? Did SoftBank overpay? Are they losing? Is this another loss for Masa-san? So the SoftBank and the ARM chip designer, they received enough backing from investors to secure at least the top end of the price range in this IPO offering. So it would command a $54 billion valuation on a fully diluted basis, right? This was written by Echo Wang on Reuters, and it was done 42 minutes ago. So it was a very new article here, but I already knew a lot about ARM because we've covered it before on the show here. So first thoughts, Brandon, the valuation they're coming out with is $54 billion for this company. And SoftBank's been paying in for a 25% stake at a $64 billion valuation. So right now they're already losing money on their valuation when they bought in. Any quick thoughts before I go further in the article?
It seems to be that there's been just a litany of bad decisions in SoftBank. What used to be at least viewed as a great company with great management, just to the past 5 years, just constant missteps, it seems like.
Yeah, they're taking high risks with it's the whole WeWork scandal was awful for them. First of all, that was awful they just straight up lost that money. And so they have other ventures that are working for them and providing them that nice steady return, but it can't keep up for too long if they continue losing money like that.
Right.
They got to spend more time researching these companies. I think so. For me, I wanted to focus on the valuation here at first for the first part of our discussion, because I go back to Virgin Galactic. I go back to the cannabis stocks of 2018, 2017, when they were skyrocketing, when Tilray was over $100 a share, and now it's down to 12. I mean, I go back to those times when a new sector emerges and then everybody valuation is just through the roof.
Yeah.
And right now, I think SoftBank is going to make their money at first with ARM. It's going to IPO. People are going to buy. It is going to move up. They are going to make a good return on it, but they can't sell right away, and that's the problem. I don't think you're going to have it. I mean, I don't know. I don't see it long term, because I see this whole AI thing as a bubble that's going to pop, and there's only going to be a few companies that are left making money off of it, and everybody else is not going to have it. But I mean, I look at ARM's other businesses outside of AI, and their cell phone business is excellent. They have great relationships with Samsung and Apple and all these other and Google for cell phone parts. So I think that's a good part of the business, but the valuation is coming from the AI. It's not coming from their cell phone business. It's not coming from their steady business that's been proven to produce for them.
You remember when Long Island Iced Tea changed their name to Long Blockchain and got a huge stock boost because of it?
No, I have no idea that even happened. I mean, it's crazy where valuations are going, and I just want people to be wary when they're making an investment decision in ARM. I believe, yes, you will make money in the short term off of ARM. It's going to debut. It's going to go up. People are going to make money off of it, but I'm concerned about the long-term valuation of ARM. You have a core business that's going to continue to make money for ARM, but is it worth the valuation they're pulling it in at?
And that's not I'm not really worried about the company itself. It's the valuation.
Yeah, exactly.
There's a lot of players in this game that are stepping up and saying, hey, ARM's actually their chips are very well designed and the company's really good. But I just don't see what jump right out of the gate with a $54 billion valuation. It's just, I don't like it.
Yeah, it goes back to my initial question 3 weeks ago. Did SoftBank overpay? And I think SoftBank did overpay, but now they own this company, and I with inflation, eventually it's going to get up to that valuation.
Yeah,
with their cell phone chip business. But I mean, SoftBank's going to have to hold for a while, a long while.
Yeah, I agree.
Yeah, it's crazy. It's crazy, some of these things that you see here. And Brandon, did you have any thoughts on Apple and their new announcements? I know you had mentioned you had seen a few of them. I'd seen a few of them. I do like the USB-Cs. I think that's a great move in the direction for Apple, but I think that that's actually a negative as far as revenue. It's a small chunk, tiny chunk of the revenue. But now that you could buy USB-C really anywhere, because Androids all use them, so now everybody's using the same power cord.
Well, so it wasn't really that jumped. The thing that jumped out to me was the roadside service powered by satellite, that they're going to partner with AAA and use the satellite to tell AAA where you're at if you need help, things like that. That's the thing that jumped out at me that I think is pretty cool. Now I don't know if that's going to be solely a feature of iPhone 15 or if Apple's going to do their normal thing and just update iOS and it'll be on all phones. But pretty cool feature.
Yeah, it is a very, very cool feature. They have a lot of good features. I think this is overall a good move for Apple. I think they're continuing to produce. I think the only reason why Apple's down right now is because China Huawei phone, I think I'm pronouncing that correctly, came out with some more information on phones and where they're going to push their phones out to. And they think that that's going to take a big chunk out of Apple. Because they're producing some good product there, but we don't actually see that in the United States because all Americans believe that, hey, what we like is what everybody else likes. Well, guys, we're only 350 million people. There's 8 billion people in the world. Just because we all like something doesn't mean it's the number one phone in the world.
Yeah. The funny thing is Hawaii. I don't know if you remember this or not, but for a long time, there were pictures going around of the Chinese copy of the iPhone, and that was Hawaii at the very beginning. They basically just copied the iPhone at the very, and for China, and they made a bunch of money off of it, and then, kind of started doing their own thing. I don't think you're actually allowed to buy their cell phones here in the United States. I
I
think
think
they
there
were,
is some kind of ban or
yeah,
restriction on it. So, but I mean, with over 1 billion people in China and over 1 billion people in India, I don't think they really need the United States market.
yeah, they don't care.
Yeah, it doesn't make a difference to them.
Yeah.
So, yeah, they're doing well, and I think that's why you see Apple going down is because of that news right there.
There's also some news that hit the wires about Chinese nationalist attack on social media that Apple might be in the middle of.
Yeah, yeah, there's that too. And you know what? You bring up a point, and I want to cover this one. This is the last article I want to cover, and I didn't know if I was going to bring it up or not, because it leans more towards political, but it has to do with geopolitical and investments and how large corporations can make a difference in one thing, and whether or not you want to invest in a company that is so big that they can affect change in other countries' wars. So I'm going to read the headline. You'll know exactly where we're going with this. The headline is on CNBC. It was came out today at 2:40 p.m. Headline reads: Elizabeth Warren calls for an investigation into Musk and Starlink
Yep, I knew it.
in Ukraine.
I knew where you were going already.
Right. So now the concern here, and this is see if I can find the right quote because I had it saved and then I had to scroll up to get that. You know what I mean? And then you lose like where you're. Here it goes. Here was the quote from Elizabeth Warren: Congress needs to investigate what's happened here and whether we have adequate tools to make sure foreign policy is conducted by the government and not by one billionaire. I think this crosses the line in that, if a corporation or a one person has the capability to act on their own and do their own thing, I think countries, no matter if it's the United States, Great Britain, or whoever, needs to say, hey, they're doing that on their own. That's not us.
Yeah,
Just
it's a
say
private
that.
company.
Yeah. Private company. They're doing that on their own.
Yeah.
Russia does that with the Wagner Group. I'm sorry. I don't mean to get political. I shouldn't have said that. But yeah, I think Musk now is in a position with Starlink and some of the other tools under the Tesla umbrella to effect changes in lots of places, whether good or bad. And I think there's other companies that have the same capability, such as Google, such as Apple, that are just as big and can do things. Just Apple has all those satellites, right?
Yeah.
That they partner with up there that they're trying to provide. If you have an Apple phone soon, you won't need a contract with AT&T, T-Mobile, or Verizon, or any of them in the United States. You can still chat with other Apple text of other Apple, make phone calls, and utilize the internet using Apple system. It's going to be all on the Apple system here soon, and they have their own satellites up there doing that. So I think all these companies, as they get bigger, these are the questions that are going to come up in the headlines we're going to see. And do you buy or sell off these headlines, or do you just kind of not do anything, just wait and see where it all goes? Thoughts, Brandon?
Most of the time, you wait and see how it goes.
There you go.
Deals be made. They will be.
Right on. All right. So
but they will be.
Yeah. So I hate to leave it on a controversial topic, but Brandon, final thoughts.
Yeah, Disney, like I said, skies aren't clear yet, but we're buying, we're holding, and waiting for those clear skies. Might be a while.
All right. Nice. I like it. I'm buying more Apple right now. I'm going to buy Disney off of what Brandon has said. And I have another buy right now. I'm probably going to buy in at Tesla. So those are the three I'm looking to put some money in. But I need to keep some cash on hand. So I'm not going all in on all these, but I am going to be adding them and making them equal weight in my portfolio. I will not be overweight on any of these. So they'll be equal weight.
Okay, so Disney's been holding right around 80, 81, 82, right around there. If the buyers give up and there's capitulation, do not freak out and sell. Just buy more when it happens. You might drop quite a bit on that situation, but I've seen time and time again, patience is rewarded by the market. And when you're buying undervalued stocks, sometimes things like that happen. Look, I was down like 20% on Meta at one point in time. I'm up 80% right now. So the capitulation happens, you take advantage of it. It might.
There you go. There you go. And also just to further say, one last thing, because those are the calls. One last thing Brandon and I will be working on this week is a better configuration of all of our social media consolidation. And you will see, hopefully within about a month, more social media presence of Chinchilla Pickin' out there as we are looking to expand and grow and start working on our IT presence. So hopefully you guys can hit subscribe, follow us on all the social medias as we continue to grow and get out there. And we appreciate the love and the DMs. Cool. All right, Tristan. Tristan, hi. How's it going, man? Thanks for listening. As always, we hope we've been educational, entertaining, and uplifting because we want everyone to make money. Have a good night.
Have a good night.
So Morgan